You know that feeling.
Yeah.
You're just trying to keep up, but all the information out there feels like this massive tidal wave.
It's overwhelming sometimes.
Exactly. So we're here to cut through some of that noise, give you a bit of a shortcut to being, well, properly informed.
That's the plan.
Today we're doing a deep dive into really two connected things.
Yeah.
What the markets did yesterday, and then this really big, thought-provoking idea about the future.
Right. So our mission really is to pull out the key nuggets from the sources we've looked at. We'll walk you through the global markets and then zoom out a bit.
Yeah, zoom out to that bigger picture,
Yeah.
the long-term view of systemic change.
Exactly.
Okay, let's jump in. The market data from yesterday, that's July 3rd, 2025.
Yeah?
Japan first.
Sure. The Nikkei average, it closed at 39,786 yen.
Which sounds specific, but it was only up, what, 0.06%? Tiny gain?
Almost flat, yeah. But here's the kicker, right? The volatility index, the VIX for Japan.
Ah, yeah, that was high. 25.83.
Pretty high. It suggests, a fair bit of caution among investors there. Definitely. And the PER, the price to earnings ratio, that was basically unchanged at 15.78. EPS at 205.21 yen. So, stable but cautious.
Okay, but contrast that with the U.S., big difference.
Huge difference. The S&P 500 jumped 0.8%. That's a decent move. Closed at 62.79.
And it's VIX.
That's the really interesting part. It was remarkably low, 16.38.
Wow, haven't seen that since December last year.
Around then, yeah, it really points towards, well, significant buying pressure, maybe even some might say an overheating signal.
Okay, so you've got this divergence. Japan's cautious, U.S. is kind of booming. What happened overnight then?
Well, the source we looked at noted the Nikkei did actually pop above 40,000 yen briefly in night trading.
Oh, interesting. Why?
Likely driven by the yen weakening against the dollar. It went from about 143.66 to around 145 yen.
Right, and even talk of tariffs, like 30–35%, that didn't really shake things.
Apparently not much. The market didn't seem too sensitive to that specific news yesterday.
So why the big difference in feeling between the two markets?
That's the million-dollar question, isn't it? If you connect it up, you see clear strength in U.S. assets. Bitcoin soared past $112,000.
Wow.
Yeah. Gold looks ready to move too, probably getting a tailwind from the S&P. But Japan, despite some stocks maybe following the U.S. lead a little.
The caution is still there?
Exactly. That underlying cautiousness persists. Maybe it's things like flight cancellations mentioned in the source, or even that analyst's forecast. Mr. Tatsu's kind of warning about Japan's outlook.
That prophecy the source mentioned. And bonds, how do they stack up?
Similar story, really. U.S. 30-year yield is sitting at 4.8%.
Yep.
Meanwhile, Japan's government bond yield actually climbed. It's up to 2.94% from around 2.8% recently.
So the Japanese bond market looks a bit weaker, too, compared to the U.S.
It does, and if you look at valuations, the PE ratios, the U.S. seems like it still has some room to run given current interest rates. Investors seem okay with it.
But Japan.
Japan's PE feels like it might be hitting a ceiling, which means basically for Japanese stocks to go higher, they really need strong earnings growth, that EPS figure, or more yen weakness.
So if those factors fade...
Japan's going to find it hard to keep up with the U.S. The U.S. just has much stronger EPS growth right now. It's a classic difference, isn't it? Manufacturing-focused economy versus one more driven by finance and, well, tech innovation.
Okay, so that's the pulse check on the markets right now. Fascinating contrast. But these day-to-day moves, they often hint at deeper stuff, right?
Absolutely. Symptoms of bigger shifts.
That brings us to this much grander idea, something that could reshape everything. Our sources really dig into this concept from Vincent San, this theme of rebalancing, especially thinking about a potential new administration, maybe?
Yeah, and rebalancing here, it's not just tweaking things. It's described as this fundamental need to, reset the system when things change dramatically.
Like historically.
Exactly. Think way back, 15th century, age of discovery, power shifts from land to sea, massive rebalancing. Or after the Great Depression, governments step in with fiscal stimulus, a whole new economic order. Or even the Nixon shock floating exchange rates, total rebalancing of the financial system.
Right. So the idea is we're in one of those moments again where lots of things in our economy, our society, they just need a fundamental overhaul to match where the world is now.
Precisely. The world needs a major software update, as you said earlier. It needs recalibrating.
And the analysis gets specific.
Very specific. It lays out 10 critical areas where this rebalancing isn't just, likely, it's seen as necessary. And maybe the question for you listening is, are you starting to see hints of this in your own life? in your industry.
Okay, this is where it gets really fascinating. Let's go through these 10 areas. What's first?
Number one, energy. This is huge. AI is just consuming enormous amounts of power.
We hear that a lot.
So rebalancing means redirecting energy supply, maybe even deliberately slowing down some existing big energy users to free up power for AI. Yeah, the analysis even suggests tariffs could be a tool for that.
Yeah.
To kind of put the brakes on older, maybe less efficient trade relationships, energy becomes almost strategic industrial policy.
Okay, what's second?
Resources.
Mm-hmm.
Think rare metals, minerals. Expect fierce competition globally.
Right, critical for tech.
Exactly. So you might see big powers making strategic moves, new deals with resource-rich countries, maybe focusing back on traditional sources like Middle East oil, a kind of resource nationalism.
Number 3.
Trade balance. At the macro level, the current setup, where some countries export massively to places like the U.S., creating big deficits, that's seen as unsustainable.
So less reliance on one big customer.
Yeah. The shift is towards diversifying supply chains, spreading production out. It's more about building resilience than just pure cost efficiency.
Okay. Number 4.
Labor structure. This is about AI again and automation. What does work mean for humans when machines do more?
Big question.
It involves rethinking intellectual versus physical labor, figuring out what only humans can do or maybe what we should be doing. A fundamental workforce rethink.
5.
Urban regional structure. We've concentrated so many people and so much economic activity in huge cities.
Which creates vulnerabilities.
Totally. Infrastructure strain, risk concentration. So rebalancing means revitalizing rural areas, especially agriculture, for food security, spreading things out more evenly.
Number 6.
Financial economy versus real economy. There are worries, highlighted in the source, about financial assets being maybe bubbly, especially in tech or companies just focused on high return on equity.
So bringing finance back to earth?
Kind of. Rebalancing here is about making sure financial growth actually supports the real economy, things we actually need, like energy, food production, not letting those vital industries get starved for capital because finance is chasing short-term gains elsewhere, grounding it in tangible value.
Makes sense. 7.
Social security. Aging populations, falling birth rates. This is a global challenge. We need to reallocate resources for healthcare, for long-term care.
That's not just economic, though, is it?
No, it touches on deeper societal questions.
Mm-hmm.
Resource allocation, how we define a good life, well-being in an aging world. Big ethical stuff, too.
Okay, number 8.
Education. Traditional schooling focused on memorizing facts for exams.
Getting obsolete with AI.
Pretty much. Facts are easy to find. The rebalancing needed is a shift towards critical thinking, numerical sense, intuition, teaching people how to ask the right questions, not just recall answers.
9. Geopolitics.
Geopolitics and the global order. The old G7-centric world. It's changing.
Clearly.
The analysis suggests recognizing the growing weight of countries like Russia, China, India, the African continent. Maybe broader forums like the G20 become even more important than the G7 for real global dialogue.
And finally, number 10.
Individual privacy. Technology is making everything so visible, so trackable.
Scary sometimes.
Yeah. So a crucial rebalancing is needed to figure out how we protect individual privacy in this super transparent, interconnected world, drawing new lines in the digital sand.
Wow. Okay, that's a massive list. It really does feel like a blueprint for a global reset, doesn't it? Touching everything from energy to education to privacy.
It's incredibly comprehensive.
And what strikes me is how they're all connected. You can see the threads running between them under this big rebalancing idea.
Yeah, and if you pull back and look at that bigger picture again, it does seem clear the world is set for some really significant adjustments, maybe even disruptive ones.
Driven by tech, by geopolitics.
By fundamental economic needs, social pressures.
Yeah.
It's all converging.
So thinking about the listener, what does all this mean for you?
Well, I think it means being aware of these huge macro shifts gives you a really valuable lens, right?
Yeah, for understanding the daily news, policy changes.
Exactly. And maybe even spotting opportunities or challenges coming down the line in your own work, your own life. It helps you see the bigger forces at play.
See the forest for the trees.
And maybe it leaves us with a final, bigger question to chew on. As we go through this potentially massive era of rebalancing, what principles should guide it?
Like, what values should underpin these huge transformations?
Yeah. To make sure the future we end up with isn't just different, but actually, more stable. more equitable.
That's a really provocative thought to end on. Something to definitely mull over.
Hopefully this deep dive has given you that shortcut, that clearer view on some pretty profound global trends.
Keep asking those big questions. We'll keep trying to unpack them for you.